This week in the markets, it was just red. Red everywhere. This is the Civil Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the markets took a huge tumble, with the Dow closing down 1,031 points, the S&P closing down 111 points, and the Nasdaq closing down 355 points. There's no need to discuss what was up and what was down because everything was down. All 11 sectors of the S&P 500 were down, with the energy sector down the most. The XLE dropped 4.6% on the day, its worst loss since 2015. All 30 of the Dow companies closed the day lower as well, with United Health losing 7.8% of its value on the day. The sell-off on Monday put the S&P and the Dow into negative territory for the year. COVID-19 was labeled as the reason for the massive sell-off. Over the weekend, the virus started to spread in places outside of China like Italy and Iran. There were 79,000 plus cases of COVID-19 and over 2,600 deaths. Analysts expect the virus to have a major negative effect on global supply chains, and that likely sparked the sell-off on Monday. But 1,000 points isn't what it used to be. The sell-off was 3.5% of the Dow's overall value. For comparison, when the Dow fell 508 points in 1987, that was a 23% decline for the Dow. In earnings news on Monday, Shake Shack reported its same-store sales fell 3.6% during last quarter, and comparable traffic was down 5.4%. But Shake Shack was still able to beat EPS estimates by 7 cents, but missed on revenue by $1.6 million. The stock fell 9% in after-hours trading. Palo Alto Networks reported an EPS beat by 7 cents, but missed on revenue by $25.4 million. That stock fell 13% in after-hours trading. And Intuit reported an EPS beat by 14 cents and a revenue beat by $20 million. Intuit also announced it acquired Credit Karma for $7.1 billion in cash and stock. On Tuesday, the fall continued. The Dow closed down 879 points, the S&P closed down 97 points, and the Nasdaq closed down 255 points. Investors were rattled for a second day after the Center of Disease Control and Prevention warned Americans to be prepared for a coronavirus outbreak. The reaction to COVID-19 has caused two indices that track technology and transportation to slip into correction territory. On Tuesday, Larry Kudlow, the president's economic advisor, stated that people should be as calm as possible, as the United States has been able to contain the virus so far. And the recent market events of Monday and Tuesday put the Fed back in the news and had investors speculating about another rate cut just a month after the Fed ignored the idea of another rate cut. In other news, Mastercard announced that CEO Ajay Banga will step down at the end of the year and will be replaced by the company's current chief product officer, Michael Maybach. The stock was down almost 7%, but there's no telling if that was related to the announcement or the overall markets or a little bit of both. The biggest story of the day on Tuesday may have been the announcement of Disney CEO Bob Iger stepping down, surprisingly. Iger, who still had time left on his contract, announced that he would step down immediately. Bob Chapek was named the new CEO. Under Iger, Disney acquired Pixar, Marvel, and what I still consider to be the steal of the century, Lucasfilms, and the rights to Star Wars. Last year, he was able to close on the acquisition of 21st Century Fox and start Disney+. Bob Iger left his mark and will be a tough act to follow. In earnings news on Tuesday, Macy's reported an EPS beat by 16 cents and a revenue beat by $20 million. The company reported experiencing a meaningful uptick in sales the 10 days prior to Christmas. Salesforce reported an EPS beat by 10 cents and a revenue beat by $90 million. Salesforce reported free cash flow increased by 23% year over year, but that good news was overshadowed by the announcement that its co-CEO Keith Block would be stepping down but remaining on as an advisor. Virgin Galactic reported $73 million in net losses and $529,000 in revenue. Virgin Galactic did report it received close to 8,000 registrations of interest in flight reservations during the quarter. And Home Depot reported an EPS beat by 17 cents and revenue of $257 billion was in line with analyst estimates. Home Depot reported an increase in comparable sales by 5.2%, beating the 4.8% estimate, and sales per retail square foot were up 2.8% during the quarter. On Wednesday, the markets replicated Tuesday by starting off positive, but then falling again. The Dow closed down 123 points, the S&P closed down 11 points, but the Nasdaq was able to close up 15 points. The fear of the coronavirus's impact on the global economy and its possible spread in the US continued on Wednesday. Microsoft updated their quarterly guidance on Wednesday, advising that they do not expect to meet their more personal computing segment guidance as Windows OEM and Surface are more negatively impacted than they previously anticipated. In earnings news on Wednesday, Square reported an EPS beat by 2 cents and reported revenue of $1.3 billion for the quarter. Square saw big gains in total net revenue from the Cash App, that was up 147% year over year, and subscription-based revenue was up 45% year over year. The stock was up almost 7% in after-hours trading. And Etsy reported an EPS beat by 9 cents and a revenue beat by $5 million. Revenue grew 25% year over year. Etsy reported an increase in active buyers of 17.5% year over year. Etsy stock jumped 11% in after-hours trading. On Thursday, there was more bad news as the Dow closed down at 1,100 points. The S&P closed down 137 points, and the Nasdaq closed down 414 points. The news that scared investors to the sideline was the first coronavirus case in the US involving a person who hadn't traveled to China. This was the issue that the World Health Organization warned about a few weeks ago, and we got to see what damage it could do to the markets. Coronavirus news was the only thing that moved the markets on Thursday, but we did get some earnings reports. Beyond Meat reported an EPS miss by 2 cents, but beat revenue estimates by $16.9 million. Revenue of $98.5 million in the quarter was a 212% jump from the previous year. Beyond Meat also saw its gross profit margin increase to 34% during the quarter. The stock, however, dropped 10.5% in after-hours trading. Hard to tell how much of that was Beyond Meat and how much of that was the markets. Baidu reported an EPS beat by 39 cents and revenue beat by $100 million. Baidu, also known as the Google of China, reported a 21% year-over-year increase in daily active users for December, and in-app search queries rose by almost 30%. And Best Buy reported an EPS beat by 14 cents and a revenue beat by $150 million. Best Buy reported domestic comparable store sales rose 3.4% in Q4. On Friday, it was another rough day. The Dow at one point was down over 1,000 points before rebounding in the afternoon. The Dow put in a strong rally with 15 minutes left in trading to close down 357 points on the day. The S&P closed down 24 points and the Nasdaq closed up less than a point. The first cases of the coronavirus reported in Nigeria and Mexico caused more panic during the trading day. Investors were optimistic after Fed Chair Jerome Powell pledged to use the Fed's tools and act appropriately to support the economy. It was a really tough week. To summarize the damage for the week, the Dow lost 12.3% of its value, the S&P 500 lost 11.4%, and the Nasdaq lost 10.5% of its value. CNBC estimates the coronavirus scares caused more than $6 trillion in global losses. We had earnings from two major companies on Friday. Footlocker reported an EPS beat by 5 cents but missed on revenue by $20 million. The stock was up on positive guidance given by the company for 2020. And Wayfair reported an EPS miss by 18 cents but revenue of $2.5 billion was in line with analyst estimates. In crypto news this week, Chamath Palihapitiya made an appearance on CNBC where as usual he defended Bitcoin from all naysayers. A link to the story is in the description below. Bitcoin continued to fall over the week, showing that it was not a safe haven against the coronavirus. Bitcoin fell to $8,549, and an 11% drop from where it traded last week. Ethereum was trading at $223.83, down 15% from last week. Litecoin was trading at $58.77, a 19% drop from last week's price, and Ripple closed our week out at 23 cents, down 14.8% from last week. Crude oil fell 15% during the week, closing the week out at $45.02 per barrel. Its large decline was also blamed on the coronavirus, decreasing the demand of oil globally. A big winner for the week was Alpha Pro Tech. This stock closed last week at $5.70 per share and closed out this week at $21 per share, a gain of over 250%. The company who sells face masks received a $14 million order over the last month. A big loser for the week was Avis Budget Group, which was down 32.4% on the week. The coronavirus is having a big impact on the travel industry, so it wasn't a shock that investors sold out of the company during the week. That's it for this week's market review. If you want to dig deeper into the headlines we covered, the link to the stories are in the description below, and a link to sign up to our weekend article in focus is also in the description below. Thanks again for checking out the Silver Reports market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section, like and subscribe, and may your next investment be your best investment. See you next week.